Hello, everyone, and welcome to Nomadic Investing. Today, we will be discussing a stock which has gained over 55% in just 1 month. Almost everyone is talking about it right now. Stock is ZIP, ticker symbol Z1P. ZIP is an Australian fintech company. ZIP was founded in 2013 and is headquartered in Sydney. Many investors were thinking, like COVID, buy now, pay later industry will soon vanish when brick and mortar stores will open. I think this trend is here to stay. Though I believe that people love to go out and shop around when they can, but no one can deny ease of shopping it online. This trend gave a rise to a lot of e-com businesses like Amazon, Alibaba, Kogan in Australia. The biggest beneficiary of this was and is buy now pay later sector like Afterpay, Zip, Sezzle, Splitit and few others. The reason new generation is turning to buy now pay later is that they do not want to use credit cards and hate the idea of debt. This being said, I personally use credit cards, and if used responsibly, then there are a lot of free rewards like tickets, lounge access, etc. But yes, you need to be on top of your finance, and new generation does not want this financial stress. Hence, they are turning to buy now, pay later sector. Basically, the concept of buy now, pay later is that you can purchase the item and get it delivered or take it home upfront and then pay for it over time. You can then divide the amount to four or more payments fortnightly or monthly, so it gives customers flexibility. There are many services like Afterpay and ZipPay which offer customer that allow them to easily sign up for buy now pay later service. It has become popular for many to take home their purchase without paying for the full amount that same day. These buy now pay later service providers allow shoppers to link their debit and credit card to their purchases. The purchased product is then paid over four equal fortnightly installments for Afterpay and an option of weekly, fortnightly, or monthly installment for ZipPay. Though, if you have missed your payments, then you still have to pay late fees. And in fact, last year, Afterpay and ZipPay made one-fifth of their revenue from late fees paid by retailers. This suggests that many customers were not able to keep up with their payments or forgot to pay. Since their credit card or debit card is linked to their purchased products, customer can get hit twice with the late fees from banks and card interest. So you still need to monitor your finances. Afterpay is leading in BNPL sector and Zip is close second. Last week, Zip reported an 88% revenue boost for December quarter and with customers numbers doubling to 5.7 million. Crucially, revenue from Zip's acquired US operation QuadPay tripled. PayPal has also joined the BNPL bonanza. Zip co-founder Peter Gray argued that the absolute cracking numbers meant that if the company were valued on Afterpay's revenue multiples, it would be worth 16 billion rather than the $4 billion. Zip stock soared an impressive 21% on one day and 55% over last month. BNPL have enjoyed a prosperous COVID-19, which is not surprising given the nexus to e-commerce. Christmas has also delivered, literally and figuratively speaking. Let's look at their Q1 FY21 trading update, which they also submitted to ASX. Okay, so let's have a look. Yes, Zip posted a revenue of 102 million, which is up by 88% year on year. Their December revenue was 40 million, thanks to Christmas, which is up by 94% year on year. Customer number have increased to 5.7 million, which is up by 97%. Zip has also raised 176 million in equity and they have allocated most of their funds to growth in the US sector. With acquisition of QuadPay, their target is to become one of the leading BNPL providers in US and Europe markets. Well, should I count UK as part of Europe after Brexit? Actually, let me correct myself. It is UK market and not Europe market. ZIP has delivered strong Q2 results in Australia, New Zealand, and they're growing aggressively in US. They will be announcing their Q3 results somewhere in May and will include UK revenue. As we can see from their ASX announcement, they have grown revenue 119% in US, but that is mostly due to their quad pay acquisitions. In ANZ, ZIP has grown 14%, which is quite good. Now, many analysts compare ZIP to Afterpay, but I think the closest competitor of ZIP is Affirm, as Affirm has the same business model as ZIP with the same installation type, but still Affirm is more highly valued than ZIP if you look closer. I think ZIP has room to grow, but that does not mean that if Affirm is richly valued, then ZIP should be similarly valued, and hence ZIP is undervalued. It is quite opposite though. We can't technically compare ZIP to Afterpay, as Afterpay margin is almost double of ZIP, and hence it gives them more cash and more funds to invest in other sectors. This being said, I still believe that ZIP has room to grow, and with their acquisitions in US and UK, this can become a major positive for ZIP. Citi has rated this stock as neutral with target price of $6.50. I would rate this stock around 8.5, but I'm being conservative here as I would still need to see their revenue from UK before I raise this stock further to, let's say, $12. I think as of now, around $8 is a right target price for it. I have a very small position in ZIP, so I hold this stock, but I don't think I'll be adding to it as of now. Please share your thoughts on ZIP in comments. Let me know if you already hold ZIP or you have been observing and sitting in sidelines for it. Please do not consider this video as a financial advice, and please do your own due diligence and research before investing. This video is for educational and entertainment purpose only. Please hit a like to help with YouTube algorithm. Share this video with family and friends. Please subscribe and hit notification to be notified about all of my upcoming videos, which would ensure that you are ahead of others in your investment journey. Thank you and keep investing in your future and your health. Bye.